Twitter's IPO, is it the anti-Facebook? Video, Bloomberg. Bloomberg.com. BusinessWeek.com. Bloomberg TV. Premium. Professional products. Bloomberg Anywhere. Bloomberg Tradebook. Industry products. Bloomberg Briefs. Bloomberg Government. Bloomberg Law. Bloomberg BNA. Bloomberg New Energy Finance. Bloomberg Sports. Enterprise Products. Enterprise Solutions. Trading Solutions. This site uses cookies. By continuing to browse the site, you are agreeing to our use of cookies. X. Bloomberg Television. Back to home page. Live TV. Video. Shows. Playlist. Twitter's IPO, is it the anti-Facebook? You need to enable JavaScript to play media on Bloomberg.com. Info. Comments. Video text. October 4, Bloomberg West Editor-at-Large Corey Johnson, Senior West Coast Correspondent John Ehrlichman and Contributing Editor Paul Kidrowski examined the numbers behind Twitter as the company seeks $12.8 billion in an IPO. They speak on Bloomberg Television's In the Loop. Please enable JavaScript to view the comments powered by Disqus. It is a social phenomenon, immediate phenomenon, and media phenomenon. It is a pretty big business. They are doing it for a relatively new company, doing $4 million in trailing revenues. They're also losing money. The operating loss of the business is over the course of the last year, $100 million loss. $100 million loss. What is interesting is how many users they have and user growth. The company has amassed 118 million users as of the last full quarter. That growth rate is slowing dramatically. The growth in users has come off from when they were growing over double-digit growth in recent quarters. It is down to 6% growth. A slowing growth rate but a big business. A slowing growth rate, a business. Perhaps big potential. John, I want to bring you in on this. Twitter is the most anticipated tech IPO since Facebook. Tell me how they compared. Twitter has been in the bathtub stage. A lot of people have said you turn on the faucet and away you go. It is explosive growth in their sales in 2010 when the revenue is less than $30 million. The company is now on track to generate more than $500 million in revenue this year. It is a big change. Investors are going to say is Facebook a better bet than Twitter? You can see the estimates on Facebook are north of $7 billion. I think at the end of the day there are similar questions to the Facebook story. But can't Twitter find better ways to generate advertising revenue? Admittedly, Twitter says overseas they have to do a better job at grabbing some $80. Collect the majority of their businesses in the United States. Paul, you are an investor and venture. What was the big picture you got? I'm characterizing it as a Midwestern filing. There is no set of the ranged founders changing the world with. There aren't multiple classes of shares, which is also a good thing. Have staggered directors. I think that is more about control than anything else. All in all, this is a very straightforward filing. It is carefully engineered to be the anti-Facebook. It could be a straightforward presentation. I don't think it should scare anyone off in terms of being a public company or be reluctantly public. My main takeaways: this is a company that is trying to do things right. As Paul speaks, I think back to the Facebook roadshow. Then they did this freely. They did with video that had a lot of heart and was about what Facebook is and has become. Maybe Twitter's going to have a roadshow. Maybe Twitter's going to have a roadshow video as well. What is engagement? What am I getting for what I am paying for? There is probably going to be a lot of explanation about the show. Probably less relation on what those filings are. If you retweet something, you're paying various rates that can be anywhere from a few cents to a few dollars for engagement. I think there's going to be a lot of questions about that. For advertisers, this is the key question. The key to growth for Twitter in the advertising revenue. Corey, when you were going through all this, the bottom line is Twitter growing company. Clocks certainly user growth is growing. Is it the revenue? The revenue per user is increasing dramatically. While the user growth is slowing, the revenue for user is increasing. They are making some money off of it. They're losing a lot of money as they start to sell ads to those users, using the user base as a way to create an advertising model. You can see them improving over the course of the last 18 months.